Thanks everybody for logging on and attending. Should be a really exciting one today. I'm going to give a quick intro on Seedrs first, just so everybody's aware about what we do, and if you're interested in our services, you can get in touch with us directly, and then I'll pop over to Andrew and the team at Zanda. So Seedrs, what do we do? We're an online platform for investing in equity of startups and growth companies, essentially. So we allow investors to invest as little or as much as they like. So from £10 in businesses that they believe in and sharing their success. So we allow the investors to do that, but also, probably more relevant to you guys, any ambitious businesses in all sectors to raise capital and build a community through an efficient online process. So you can actually raise from that customer base, you can build a customer base, you can do a marketing campaign essentially alongside a fundraising campaign. Our HQ is London. Obviously, we're working remotely. I've very much got the granny background at the moment, so yeah, we're all remote at the moment. But London is our HQ. We've got offices in Lisbon and Berlin, so we're pan-European. We're backed by some top-tier institutional investors and VCs, but also 2,500 of our own users. So we've actually crowdfunded ourselves for the last times that we've been raising money. You may have seen Seedrs has announced a merger with Crowdcube. And the intention there is to create one of the largest private investment platforms globally. But we're waiting on the results from the CMA for that. That should hopefully be in the next few months or so. But in the meantime, if any founders interested to discuss fundraising through the platform, feel free to reach out to me directly. It's ross.kelly@seedrs.com, or you can email at partnerships@seedrs.com, or indeed go to the Academy, which is a page of our platform where we've got a host of useful founder-focused content, and you can go through that, download some content pieces, and just leave your details there, and we'll get back to you. But today, we're starting the first of a series of workshops with Zanda. Zanda are an exec search platform who focus on the startup and scale-up space, and I'm conscious of giving too much of an intro on them because I'm sure Andrew will do that very well themselves. But this is going to be the first of a series focused on the finance side of being a startup founder. And yeah, over to you, Andrew, to kick off.
Thanks, Ross. Thanks, Ross, and thanks again to Seedrs for letting us present to your network. It's a really obviously established and powerful network, and I guess the market trend that we're seeing is that a lot of founders and a lot of not just seed, but Series A and Series B, C raises are done on, the crowdfunding space, as it's a great way to tap into customer base and also have, kind of a marketing plan alongside a Series A, B, C raise. So it's become, a significant part to play in the growth strategy of startups. So really excited to announce that we're running a 4-part series in partnership with Seedrs over the next few weeks. And during that, we'll cover a lot of the growth and talent strategies that startups should consider or embody to grow the business and hit their strategic objectives. So lots to cover today, but the first one on, I guess, who's Zanda? So who are we? So essentially, Zanda supports seed to Series D startups to scale. We work with the founders, the HR directors, the chief people officers, the VCs to identify key functional experts to help the business hit their next milestone or reach their strategic initiative or help with their strategic initiatives. So the 4 sections that we'll be covering, the 4 webinars we're covering in the next few months, we'll cover establishing a first finance function and choosing the right finance leader, which is obviously today. We'll cover how to build an appropriate board of debt directors, exco and non-exec, and how to have the right functional expertise surrounding a founder or a founding team. We'll also discuss when to bring recruitment in-house and when to have a HR director, and how to go about wide-scale scaling of mid-management and junior management and entry-level roles into a startup. So lots to cover in those 4 sessions. Obviously today we're focusing on choosing the right finance leader, and I'm delighted that Andy's been able to join us to bring his expertise, as I am not an expert CFO. Andy, do you mind just giving a quick overview of your background?
Sure. I have spent virtually the whole of my career as CFO of various early stage / scale up technology firms, practically always venture backed, 20 years in New York and the rest of my career here in London. So lots of experience building finance functions and sort of more broadly the scale up business.
Yeah, perfect. And obviously Andy's a great example of that experienced CFO, whether it be a portfolio CFO because you can't afford someone of Andy's experience full-time, or a full-time strategic CFO who can lead alongside the board on a Series B, Series C raise, who can lead on international growth trajectory plans, IPO readiness, and exit readiness, whether it be trade or private equity sales. So what you have with Andy is that experienced strategic CFO, but clearly that only suits a certain sort of startup and reasonably significant growth ambitions to require someone with that skill set. So today we're going to be talking around the different individuals that you can consider as a finance leader, and that ranges from an Andy right the way down to an outsourced bookkeeper or an accountancy firm or an in-house finance manager. So today we are splitting the session into 3 sections. So essentially we're doing a startup review, which enables you individually to think about your startup, and we'll talk through the key criteria to consider when you're doing a startup review, which will help you ascertain who you need to lead finance and what finance needs to look like. We'll then talk through the finance profiles that are a consideration for a startup, what they do, how much they cost, what the variety of options are. And then we'll do some case studies and some examples of businesses that we've supported over the last 12 months, in terms of we'll give you a situation of what that startup review is, and we'll give you and highlight the finance profile options they had. And hopefully from doing the strategic review yourselves individually, you'll get the picture of what finance profile options you have and what are the cost benefit analysis of going for or profile X over profile Y, etc. So 3 sections. At the end of each section, there is an opportunity for questions, if there is any questions, and then there's obviously Q&A at the end. Before we go into that, I'd like to do 3 quick polls. So if, Laura, you don't mind putting up the first poll for the participants on the call to do. Essentially what we're trying to do here is for you to review some of the key parameters that are essential for you to consider when you're, I guess, analysing your startup. So if you could fill this out, obviously confidentially, then it gives us a picture, Andy and I, a picture of the audience, as well as hopefully yourselves being able to kind of analyse your startup and where you are on the journey. So there's 3, so ideally fast fingers, please. Okay. So the majority are below, well, the vast majority are below 20 staff. Okay, perfect. If you go on to the next one, that would be good. So this is, is it, who do you have any investors? So who are your current investors? Do you have any, and if they are they any of these? So I would say that predominantly this will be no external investment on the basis of it being under 20, most of the people, but we'll see. Oh, here we go. Okay, so quite a bit of angels, quite a bit of friends and family, and then a bit of VC, PE. That's interesting. So maybe slightly more investors than I was expecting on the basis that there's majority under 20 staff in the businesses, but there were a few that were up to 50 staff. So if we go on to the next poll as well, that would be fab. So what is your next milestone for the business? So is it a pre-seed, seed, or is it a Series A plus, BC? Is it a potential listing? Is it international expansion, a product launch, kind of, trying to find product market fit? Or is it more than one of the above, which I think is a really, an important thing to consider when you're reviewing a startup, how many things you're trying to do at once. Let's see, Laura. Okay, so a lot of Series A and a lot of pre-seed, and 17% more than one of the above. Okay, that's really interesting. So thank you for that, and thank you for doing the poll. So we'll dip into the startup review, and essentially what we're looking for on the startup review is these are the 4 key categories that we consider are essential when you're reviewing your startup to try and ascertain the level of finance leader you need, and also, I suppose, for other functional specialists as well. So industry sector. So how mature is the industry sector? Is it a new industry sector, or is it an established industry sector? What is your international footprint now and future? And obviously with that, you've got the tax and transfer pricing elements. How complex? So, is there an R&D process? Is it a biotech business, which is obviously operating in a very different way to an e-commerce business? Is it an AI business, or is it a SaaS business, where a SaaS business, and you'll be able to allude to in a lot more detail, has got that annual recurring revenue model where obviously it'll build over time. And then the volumes piece, obviously high volume e-commerce businesses or retail businesses or B2C focused businesses will need a finance function set up differently than a biotech business that's looking to do an IPO. And therefore the transactional elements of the team will be completely different versus a more R&D focused industry sector. Andy, do you mind just giving your thoughts on, I guess, holistically, the industry sector review that startups do?
I guess when you're in a sort of fairly mature sector, there's a lot of examples to go on, and you can look around and see the various other entities that are in your sector and see how they're building out their finance function and the sort of complexity of what they're going through. When it's a new sector, when it's something very different than has been done before, you don't have those examples, and it can be very difficult to make decisions on kind of the skill set that you need. I've sort of been involved in both. I've mostly been in sort of existing sectors, but I've certainly been involved in a couple of businesses that were very new ideas and didn't really have any peers or examples, and that was very complicated to work out what we needed.
And from the international standpoint, obviously the finance director or CFO, they obviously come from a generally strong academic background and take a lot of responsibility for areas outside of finance. And from my experience, quite often the CFO, COO job title is a very popular one because there's a lot of trust in the finance director to kind of run a thorough process and take ownership for projects outside of their core role. The international expansion piece, obviously you've worked in New York and London. How much does finance play a role in that international scoping out and the technical elements and the commercial elements?
I think very much so. Finance role plays a big function. It certainly deals with lots of the sort of admin stuff, all the kind of corporate filings that need to be done, and research on where to be and what are the relative advantages of New York versus Boston or something like that. I don't think it's not tremendously complicated, that kind of stuff. So if you're a UK business and you are thinking that now is the time to launch in the States, it's not incredibly complicated, and there's lots of kind of good guidance nowadays and lots of people who can help you with that. There are most of the big legal companies have whole areas, whole teams that help people expand abroad. So it's not tremendously complicated, but there's a fair amount to do. But I don't think you need someone tremendously sophisticated or expensive to help you with that.
I think one of the things that also around certain sectors and the complexity of certain sectors, one of the things that I've noticed is that individuals that maybe come from a bookkeeping or finance manager background that are backward looking are not normally the first finance hire sometimes in a startup, or it's an outsourced accountant. And if the business is a complex business and they're doing things like R&D and there's opportunity to get, tax credits and R&D grants, having a portfolio CFO or a strategic up and coming CFO profile that can spot quick wins like that and to lead on it, I think is massively important. And it's a surprise sometimes to the founding team what can be found.
Yeah, and I think that's true. One of the reasons to go with a sort of more expensive or more experienced person is that, they will have an understanding and have done things that you don't have experience of. And, some of those things can add significant value straight away. R&D credits is a good example of that, where, that can be very complicated. It's fairly well known about now in the UK, but navigating through it can be fairly complicated. So that's an area, a good example of something that's relatively complicated, where having someone who's been through it before or has the ability to do that can be helpful.
And I think that the interesting thing as we go through these different segments, obviously that was industry sector, is all four of these categories need to be considered concurrently. So we'll obviously dip into that in more specific detail, but it may well be that the background of the founder has previously done R&D tax credits and comes from an accounting background even. But if the other elements which we dip into far outweigh them being utilized on R&D tax credits or applying for certain grant elements that a finance specialist needs to do, then clearly, hiring someone to do that is more important. And this comes on to kind of, what is the realistic growth trajectory of your business? And the key word here is realistic. The number of times that we see founders that are super passionate, which is great to see, but their expectations of their product market growth numbers are not necessarily inflated, but they are very enthusiastic and passionate about their business as they should be. But it's not always challenged and as realistic as perhaps it should be. And what that has happened and what that will happen again, I'm sure, is it enables that individual to sell the dream to a CFO or a finance director or a marketing director or a CMO. And then 3 months into the business, it becomes apparent that this isn't a hyper-growth business. This isn't flying off the shelf. And actually, the founder or the investors are overpaying and underutilizing the resource that they have. So the question around what is the realistic growth trajectory is to avoid situations where you need to hire twice, once with a lot of passion and excitement, and then once to recover the situation where you don't need that individual or that individual moves on because the dream is not what the reality is. So is this hyper growth? So how do we categorize that? What are the investors' growth expectations? So importantly, whether it's VCs or private equity, what are the growth expectations and what categorizes hyper growth from a headcount and revenue perspective? And I'm not going to ask you to give specific numbers unless you think you want to, Andy, but you've obviously operated in stable growth environments and hyper growth environments, and you've had investors that are maybe more considered and backing the founding team and have got a long-term view, and then somewhere it's different. So perhaps if you don't mind just giving a snapshot of the topic of kind of growth trajectory.
Yeah, I mean, I think, as you say, growth means different things to different people, and founders or venture capitalists or PE firms, have a different point of view on what's fast growth and what's sluggish. I think it's sort of generally speaking, the more significant the growth is, the more experienced CFO, finance person you want to go with, just because the greater number of moving parts, the more likelihood is that person is going to have the skill set or has experienced those things before. And the kind of secret to, or one of the secrets to growing and being able to grow quickly, is being able to anticipate the challenges that are going to come. And the challenge with growing fast is that things change all the time. So whenever you put something in place, within a few months, it won't be adequate for the next level of growth. So if you've got someone who can anticipate that, and they can sort of advise you to hire the people you need or put in place the systems that you need ahead of when you actually find out that you really do need them, that can be tremendously valuable. And certainly from a venture PE investor point of view, that's what they will be worried about. Can you, if the business is capable of great growth, does it have the people inside it who will be able to help it accommodate that, or will it fall over and therefore not achieve the growth that it can?
And I guess there's, if you take revenue growth, for example, there's this combined with the complexity of converting business and getting the revenue in the first place is a key consideration. If the revenue growth is B2B sales and the sales pipeline is full of proposals and pricing processes and evolution of product market fit, or if it's an e-commerce business that's suddenly kind of flying, the way that the finance will have an involvement in that will be different. B2B SaaS, I guess, will operate from a finance involvement very differently to other sectors.
Yeah, a B2B SaaS business is relatively straightforward and can grow quite quickly without a tremendous amount of complexity or lots of people or lots of systems. E-commerce is a whole different kettle of fish. It's very complicated, and doing 50 million of revenue, or going from 20 to 50 million of revenue in an e-commerce business to consumer, very different, very much more complicated than doing that in a SaaS business.
Yeah, exactly. And I guess just some key parameters from what we see in terms of headcount growth. There's obviously a lot of people on this call that are about 20 staff or 30 staff. If you're looking to go from 20 or 30 to 100 staff in a year, then I would consider that hyper growth. If you're looking to go from 30 to 40, then obviously that's not, and the same with the revenue kind of model. So just consider those elements and maybe be realistic about whether that is easily achievable with the team that you've got, and if not, how you're going to go about it. So I'm conscious of time. So key milestones. This is kind of the next milestones, I guess, for the next 12 months, maybe 18 months. So is it led by the investors that it's an ambitious buy and build strategy? Is it all around the next fundraise or next fundraises? Is there a chance that there's an exit on the cards sooner rather than later? If you're, early stages, what's the new product launch? What's the international growth trajectory? So these key milestones are obviously, massively important when you're looking at the individual to lead the finance function, and having that ideal view of 12 months, 18 months down the road is ideal, but not always feasible. Andy, with regard to kind of these key milestones, which elements of these do you think founders could lead without a proper CFO? I mean, fundraise, I guess, if it's a seed raise, maybe that's feasible, but if it's a 40 million Series B or a 20 million Series A? And, what are your thoughts?
Well, I mean, a lot of it depends upon the sort of other factors that you've mentioned, particularly things like what are the experience of the founders. If you've got a experienced founder / CEO who's, done M&A transaction before and successfully incorporated another business at some point in their career, then you don't necessarily need a CFO to do that for you. Again, as you say, the next fundraise, if you've got a little bit of experience of fundraising, you can probably do a 10 to 15 million Series A / Series B without a CFO. If you've been successful before at raising money, then there's not necessarily a reason why you need a CFO to help you do that. Again, slightly the same with, you're probably not going to do an IPO without a CFO, even if you don't think you really need one, because the bankers and investors will insist that you have one. But, again, what the skills that the team have, the CEO and the rest of the team have, can determine, to what extent you need a CFO at these various places.
Which leads us on to the final piece of the jigsaw, I suppose, in terms of the founding team. What does their background have? So have they previously led seed or even Series A? Do they have previous exit experience? Do they have technical accounting experience or M&A corporate finance experience? And essentially, if this is a seed business, a lot of the people on this call are probably seed looking to do a Series A. And I'd say, I don't know if you agree, Andy, but if the founder has led the seed raise and comes from has previous fundraising experience or comes from a corporate finance investment banking background and they've done a seed, they probably can do the Series A, as long as it's not, you're nodding, that's good, thank you. As long as it's not, a kind of a significant Series A, but it's quite often at the Series A and definitely the Series B, even if the founder is investment banking professional that's previously done IPOs and fundraising. At a Series B level, the VC and maybe at the Series A level will want a dedicated finance person there anyway, won't they?
Probably. As you say, if you're doing a 10 million Series A and you have a very strong finance background and you've done the seed round and successfully did that, and you really understand the economics of the business, and you're going to be able to talk in the language that the Series A investors or potential investors kind of understand and want you to talk about, then if you have all those skills and are comfortable, you don't necessarily need a CFO to get through a Series A. It's quite likely if you do a sort of 10 million Series A that the investors will want you to get a CFO after that, because apart from anything else, they don't want the CEO to spend all their time doing finance stuff. They want them to do CEO stuff. But if you're, not particularly sophisticated financially and don't come from that kind of background and have never really been in a situation where you've raised 10 million pounds, it makes it that much harder to raise the money without a sort of sophisticated, experienced finance team in place.
Yeah, I agree. And I've just put on there, the technical management accounting background. Now, there's basically a cost benefit analysis with all of these things. So if the business is early stage and doesn't have the cash to hire a finance professional and they're stable growth, then a founder with a background in accounting and can do the books is obviously a benefit that they continue doing that to a point where it's to the detriment of the growth of the business. And there needs to be that, I guess, that flip point where it's better to hire the team below so that the founders can do what's really adding value. So this is the overview of the startup. There have been some questions come in, Ross. I don't know if any of those are for this section. If there are, then happy to answer a couple, but then we probably need to jump into the finance profiles.
Yeah, I think actually carry on for the moment.
Yeah.
We can answer a few more of the questions at the end.
We can do them at the end, yeah. Perfect. So that then hopefully gives you a picture of those, of your startup and what are the considerations. And these are the finance profiles that you can consider. I guess these are the main finance profiles to consider when it gets to late seed Series A. Not on this list is obviously an outsourced accountancy firm, an outsourced bookkeeper, or a finance manager that you may have. And these individuals will be very good on the transactional backward-looking accounting, but probably aren't able to give you the forward-looking insights that you're striving for from a data perspective. Obviously, the CFO, as Andy will know, has the opportunity, like a CEO, of having all of the data flows in and out of a business. So therefore, they've got that commercial awareness and holistic view of the business. And the further you drop down from the CFO, the less that is able to be there. So Andy, do you mind talking us through kind of your view of these three profiles? And I'll just click into the controller one.
Sure. So I think this is the sort of first proper, what I would call proper kind of finance person that businesses get. Obviously, when you're small, you may have a bookkeeper or some sort of outsourced finance function that does the day-to-day sort of bookkeeping and sending invoices and entering bills and stuff like that, and just keeping on top of stuff so that the CEO and the rest of the gang can get on with their jobs. But the sort of controller is the, maybe the sort of next level up from that. And with all these roles, there's quite a lot of sort of bleed from one level to the next. So you might have someone who starts, in a very sort of unsophisticated way and hasn't really done this before. But if they have a sort of desire to work in the finance world, they can go quite a long way in the business without any real qualifications or experience. But typically, a financial controller will have some sort of accounting qualification. That could be 2 years of post qualification, working at Deloitte or KPMG or something like that. And so still relatively early on in their career, but they want to join, a startup, an early stage business, and they will be able to do a lot, all the way from the simple bookkeeping stuff, all the way to the sort of more complicated corporate type stuff, dealing with auditors, managing sort of statutory stuff like corporate records and compliance, those sort of things. And we'll be able to do all the kind of management accounting and producing analysis for the CEO and other people around the organization who ask for it. So a controller will be able to take you a long way, particularly if there's some sort of good guidance in the organization. If you're a sophisticated CEO and you know about sort of finance and you have come from a finance background and know what you're doing, then you can give this person a lot of guidance and they can last a long time in a business.
And is there anything obviously you've historically hired controllers below you, but likewise, I know you've advised startups when you've not worked directly in them. Is there anything you really look for in a controller, I guess character-wise as well as skill set-wise, when you try and bring them on board?
Sort of happy to get their hands dirty and do lots of crappy jobs.
Yeah.
As well as a sort of view that they want to sort of improve themselves, and they have an eye on the future and on their career, and they have a sort of desire to understand what's going on around the business. So the best controllers are the ones who want to understand every aspect of the business and why, things are done in a certain way and how they can be improved.
Yeah, perfect. Thanks for that, Andy. And then if we just dip into the finance director profile.
So then this is a sort of more experienced, usually more capable person, usually sort of sits somewhere between the controller and the CFO, but again, the sort of skill sets bleed from one to the other. I sort of look at this person as someone who'll have a bit more capability to operate outside the finance function and play more of a role elsewhere in the business as well. So they can, get involved in other areas of the business and manage projects, deal with other execs in different departments to help them, with their challenges, that sort of thing. So they're just a sort of a bit more sophisticated, a bit more able to understand the economics, the leverage assumptions in the business, perhaps to deal with investors on a sort of probably simplistic, it's not the right word, but a sort of, able to answer investor questions and understand where the investors are coming from when they sort of want to get into certain types of details.
Is it fair to say, obviously there is that area where you've got kind of financial controller, then head of finance, then finance director. And I think there is also a personality confidence shift as you get a bit more experience, which enables you to have a bit more, I guess, gravitas in circumstances. And that's quite important, isn't it? When you're paying that extra 20, 30,000, that you can have a bit more confidence in them owning things, I suppose.
Yeah, I mean, I think one of the sort of things, it's not really a kind of specific skill, but as you go up the organization, the ability to deal with the other execs and other departments who often won't want to do what you want them to do. So having that gravitas and that skill set to be able to, work with people who potentially are more senior than you, got more experience, and get the right thing done for the company becomes incredibly important. So it's a sort of softer skill, but it's more and more valuable. And I think that would be the thing that would stop someone going from kind of controller, finance director to sort of higher in the organization, or make it hard for them, would be if they don't have those skills and experience of dealing with the senior execs who don't want to do what they need to do, and you've got to convince them.
Yeah. Fine. And then finally, if we go into the CFO role and the difference that brings to the organization.
So I think the CFO, to the point I just discussed about being able to convince people to do things, it's much more of a sort of value creating role where you're working in the organization, across the organization to help the various other execs work out how to, build a better department, to do their job better, to look at all the KPIs and work out, not just sort of say, okay, that's interesting and sort of look at the backward facing data, but work out what to do about it and know what to do about it, and be able to convince those execs to make the changes, and that you've got the gravitas and the experience to convince them that, moving in a different direction is the right thing to do. So it's much more about sort of dealing with the business on a strategic level and really understanding how the business is going to become more valuable and what can be done to fundamentally change the way it's doing things. And that comes from just lots of experience of seeing various different businesses and trying different things and seeing different org structures work or fail. So it's just a sort of a a kind of more valuable skill set, really, the CFO.
It also frees up the rest of the board or the founders to do what they're good at, isn't it? It enables them to play to their strengths because they've got someone to cover a blind spot if it's a blind spot, but also just to lead that relationship with potentially the external banks and investors and advisors that they, as you scale up, you inevitably need to manage.
Yeah, completely. You don't want the CEO particularly doing sort of CFO type stuff, nor do you want them necessarily spending all of their time down in the organization working with departments to sort of make improvements and make themselves better. And if you've got a CFO that can do that for you, then that's a great partnership.
Yeah, perfect. Well, look, that gives you the snapshot, and then we've gone into the salary benchmarking here. Now, essentially, this is based on London, and obviously, if people on this call are in Europe or the US or in the home counties or in Scotland, wherever, then feel free to drop me a note and I can give you some better kind of benchmarking. But I wanted to use something that the vast majority of the audience would know. So this is obviously UK pounds, and this is the base salary. And there would be maybe small elements of bonus from the controller, but there'll obviously be more significant potential bonuses for FD CFO. But the priority here will be the equity pool or the share option, the EMI pool that will kick in predominantly from the finance director point. Sometimes it will kick in sooner if there's an EMI scheme across the organisation. But essentially what we're looking at here is a 50 to 60,000 pound individual will be a finance manager around the controls, the month end, maybe some analytics and insights. The controller would then build up the KPIs and the FP&A process, maybe lead elements of the budgeting forecasting, as well as the year-end controllership piece. There is a segment in between controller and FD, which is head of finance. And then the FD piece then kicks in probably around the 90 to 120, depending on where they come in that level of experience as an FD. And then obviously then either the portfolio on a day rate or a salary prorated if they're a professional portfolio CFO would normally start from 130 plus from a Series A and more than that for a Series B. So I guess this is the cost benefit analysis that your startup and new founders need to consider when you're ascertaining your startup review and you think about the next milestone, you think about the growth trajectory, and you also then compare that to the background that the founders have and how their experience would be utilized best elsewhere. You then go along this curve somewhere from the 150 space right down to the 50k space. I think an interesting point for startups when they're hiring, not just in the finance function, but generally, is I think sometimes job title, we're obviously in a kind of a more free-spirited startup scale-up environment where job titles probably aren't considered as much as in a corporate environment. Having worked in a FTSE 100 business before and then working in a startup and having supported startups and FTSE 100 businesses, I feel like startups could utilize job titles better and help with longevity of individuals staying, organizations where there is more opportunity for, I guess, standardized job progression. So a controller could get to a head of finance in 18 months' time, could get to a finance director 12 months after that, as opposed to not having those conversations up front. And I think a lot of these things around key hires, when it comes to this controller, FD, head of finance, is a lot around communication. So there needs to be a clear communication. There's an opportunity for you to step up, but also there needs to be an awareness that sometimes things change and that the business may go from significant growth to very significant growth. And therefore, if the Series B raise happens 12 months sooner and it's 3 times the size, or there's a potential beauty parade of PE firms, mid-market firms interested in buying the business, then unfortunately the FC or the FD probably isn't able to do that step-up journey as much as it was initially discussed. And therefore it's better to be upfront that at some stage there is a chance that a CFO may need to come in. If it does, that's a good problem to have, because it means that your equity is worth a lot, and also you've got someone to learn from in a more significant period of growth after you've already done the elements. Now, clearly, what we're trying to get to here is making one hire and making the right hire, so you don't need to make more than one hire. But sometimes things do change. So I'm conscious of time, so let me go through these case studies very quickly, and it gives you a snapshot of some of the circumstances that we've supported businesses with, and it helps you kind of monitor. So an e-commerce business that's medium to high trajectory, the founders have a background in finance and corporate finance. Therefore, they've done the seed raise, and we feel comfortable that they could do the Series A, but they wouldn't be able to do the Series B later on. When it gets to the Series B, someone from an investment corporate finance background that's done a seed and Series A wouldn't have the time, and also the investors wouldn't want them to be leading that Series B raise. So therefore, you've got two options. You've either got the FC, FD, head of finance individual that's able to step up, that you hire to shadow the founders on the Series A and enables them to be ready to do the Series B later on, or you get a hands-on finance manager to support the founders to do the Series A, because they can lead the Series A on the proviso that in 12, 18 months time, they need a fully fledged CFO to lead that Series B. Another case study, a stable growth business. The founder doesn't have any finance or fundraising experience. They're only doing a 1 million seed and then a Series A 12 months down the line. But because the founder does not have, for example, if the founder does not have any fundraising experience, then you probably need a portfolio CFO to support the founder with the seed and then the Series A. Hopefully they can up their hours and become slightly more full-time if it's of interest to the CFO and the growth has increased. Or they could at that stage get a controller. The other option is if the tech founder does have fundraising experience, they could lead the seed. From angel investing, I'm aware that having a founder lead a pitch is the most important thing in terms of believing in the founding team. It does have more value having a CFO, portfolio CFO or FD on the pitch deck, but if they don't have that, you could have an outsourced finance manager until it gets to the Series A stage. Last couple, so in a fintech business, it was good trajectory. They were doing the Series A in 12 months' time. Founder didn't have the finance, fundraising or corporate finance experience, so therefore they needed some support. The option, they went with the finance director who was ambitious, who was actually a number 2 to a CFO and has previously done a number 2 to a CFO role in a Series A and Series B raise before. So they'd seen it in a number 2 capacity, but they were ambitious to lead it on their own right. So they came in and supported a non-corporate finance founder with that Series A, and they were then able to step up. The other option they could have gone for, which they didn't, is a portfolio CFO who could have upped their hours if they were interested and there was a good fit, kind of with the founding team, and outsourced finance to support that portfolio CFO. That's a really important point. If you're hiring a strategic CFO on a day rate or on a part-time rate, then get your money's worth by keeping them at high-level strategic added value elements and outsource the transactional. Don't overpay for the resource that you don't need. And the last one is a pretty straightforward one. They were looking to do a Series B, then IPO. The founder didn't have any finance background, so therefore went straight for a biotech CFO with previous Series B, Series C, and IPO experience. So hopefully, I appreciate that. That may have left us 10 minutes for Q&A. Hopefully that gives you a snapshot. What we're trying to do here is the assessment phase is you doing the cost benefit analysis of where your startup is and where it wants to be, and comparing that with the finance profiles that are potentially on offer to you.
Awesome. Thank you so much, guys. We've had quite a few questions come in, so it might have to be a bit more of a quick fire answer round, if that's okay.
Yeah, no worries. Keep us on our toes.
Indeed. Some curveballs in here. No, the first one's about a Moscow-based Martech. They've already got a CRO and a CEO level people sort of lined up to drive their revenues. How vital is the CFO to their roadmap?
Go for it, Andy.
and it's difficult to say. Probably not very vital at the moment. If they're still pretty early stage, I don't think they need a CFO at the moment. It'll depend upon what skills they have in the business and how fast, how ambitious their trajectory is.
I think the point. Sorry, Andy, carry on.
No, go ahead.
I think the thing from my perspective is they need to have the next milestone in the mind for 12 months down the line. And if that milestone, the founding team and the senior management team don't have the skill set to lead it, they could, ahead of schedule, be lining up an individual that either is portfolio part-time or is a early stage investor that does a NED role. So we'll obviously talk about the building of a board of execs and non-execs on another session with Seedrs. But obviously, when you're bringing in functional experts on the board, you probably don't have the day rate or the money to pay them, but they may be angel investors, and they may quite often want to give back, and actually the equity be more of a benefit to them than not. So having a CFO, NED, or a CFO investor who can up their involvement but is still aware of the business 12 months going forwards is better than having to race into that situation. Even if they're only doing 1 day a month or 1 day a quarter for the first period, it's a name on a pitch deck that's credible, and you can dip into if and when you need them.
Yeah, awesome. Okay, cool. A few questions around the FD and FC piece as well. I mean, I guess the first one is, how do you assess if one of them is able to step up to that bigger role of the CFO? But also, as you are just growing, is there a way that you can kind of combine both roles? Is there a sort of bridge between the two, like a finance business partner? Have you seen that kind of come to fruition where you've been hiring for roles?
I think it's maybe what I'll do. I'll talk about how I would assess it from a recruitment perspective, and then maybe Andy can then from an actual doing the job perspective. I think from a founder recruiting or from a search firm recruiting, how we assess whether an FC or an FD can step up to a CFO is a number of things to consider. It's track record of what they've achieved and they've delivered in their previous companies. It's a demonstrative track record of promotions in organizations, so that they've actually stayed at organizations and had longevity at businesses, startup scale-ups, FTSE businesses, where they've committed to that organization and they've been promoted for doing good work and they've been recognized for doing that. I think there's a lot of people out in the market that move for job promotions, and they move from one company to another company to get a raise in their salary and a change in job title. For me, internal promotions and delivering in an organization and achieving is a really good sign of the commitment and their ability to step up. The other thing that we run a future CFO program. So for individuals that are FCs and FDs and head of finance that are passionate about stepping up to a CFO, them being on that for me is a really big sign, because it demonstrates they've got the commitment and they're prioritizing development. So they are building an awareness of where the development areas are, and they're working on them ahead of schedule. Which I think when you're put into a scrappy environment and you need to take things by the scruff of the neck, being proactive around your development is a massive thing. So I would be looking at their awareness and do they know what they need to improve, whilst being hands-on and grabbing this opportunity with the best of their ability. Yeah,
brilliant. Okay, there's a few questions around salary, which I know is always tricky to say depending on the stage of the company. But is it a fair assumption to say that the earlier stage of the company, there might be a lower salary for hiring a CFO or someone in this role, but potentially there's an equity or some kind of share options that can be offered? And do you have any view on whether that salary changes depending on where you are in the UK? Is there a London price? Is there a Northwest price? Is there a Scotland price? We had a few questions about that in the chat.
I think there's a base salary change on location, but from an equity standpoint, I'd say, Andy, you're probably better placed than I on that knowledge.
I don't think I wouldn't have thought that equity changes sort of by location. It definitely changes by stage of company. So, for example, a $1 million revenue company with 25 people will end up giving more equity than a post Series A $7 million revenue company with 60 people. It's a risk reward thing. So you'll have to give up more equity at an earlier stage to get a good person on board. As it relates to sort of salary benchmarking, I think there's some pretty robust benchmarking data out there. There's all sorts of surveys that are done on an ongoing basis about pay for the finance people around the country. So I think you could, just search for that. You'll find pretty consistent data on what you need to pay a, controller who's got a PwC degree and has done 2 years work experience. You zero in on exactly what you need to pay that person. It's quite a narrow band. There won't be much discrepancy.
Yeah, understood. Okay, great. We've probably only got time for one more question, but I'm sure we can pick them up afterwards directly, or speak to Andy and Andrew directly. One quite interesting one here. So this is the case. A fintech company. They've raised 3.5 million seed, and the founder has an investment banking background. Company's got 14 employees. In 12 months, they're looking to do a Series A, probably around 10 million. But they have no financial people, just an outsourced accountant who does management accounts and payroll. What's the first hire they should make in the finance department?
I would get a controller. So I would get that sort of, I think they can go with anything from a sort of PwC qualified, not very experienced person, all the way up to, someone who's been a controller for 7 or 8 years and is more expensive and more qualified. But I would get a sort of controller, someone who can, if you're going to, you probably won't need a CFO to raise the Series A, given the sort of track record thus far. But you'll need, a controller will be able to help you and will understand how to do all the due diligence stuff that's going to be required to do a Series A. There's a ton of work to be done there. There's a ton of data to be sort of collected and understood by that person. So I think it's time to get an internal person in a full-time role to help you with that.
Yeah, I'd agree. I think either a controller who loves systems, processes and setting things up and is happy doing that for the rest of their career, and then you can assess if you need to rehire in 12, 18, 24 months for a FD CFO for a Series B, or you get the controller who's happy to be hands-on but is ambitious and can step up and learn on the Series A raise that the founder leads.
Yeah, brilliant. Okay, yeah, just last one, and then we will have to wrap it up because we're over 1 p.m. now. But this is a really interesting last question. I guess, how can a company help prepare its FD to become a fully fledged CFO? That's probably resonates with lots of the founders in the chat today. But what kind of steps would you recommend, the CEOs or the rest of the business guiding the FD on so they can step into that role?
I think, mentoring is really important because they don't really, you don't know what you don't know. So, having someone who's done it before, having some mentors who can explain what the role is great. Having the other execs who probably have dealt with CFOs before and can sort of show them the way and help them sort of get better at certain things, and bring them, into projects that they're doing. Maybe the head of sales is, wanting to bring on board a Salesforce admin to help them with that side of things, bring the FD into that world as well. So I think just immersing them in the sort of value driving things of the business and mentoring them as much as possible.
Brilliant.
Yeah, I think I agree on that. I think you could potentially look at a an experienced CFO as a mentor, or a portfolio CFO that comes in for a 6-12 month period. But I think what's key, and that's again what the Future CFO program that we run does, is it is a holistic view of the CFO role and ascertaining kind of where your strengths lie and where your development areas are, and just working through those development areas. And maybe you're never going to be an expert in an area where you're developing, or it's not your main strength, but having an awareness of it so that you can hire for your blind spots or build tech to cover your blind spots so that individuals can focus and double down on their strengths is also really important. But it's a good problem to have if you've got a finance leader that's ambitious and wants to take on more and is organized and is potentially commercial and very strong with data and analytics, then that's a brilliant situation to be in.
Great stuff. Okay, well, thank you so much, everyone, for your engagement. Thanks so much to Andy Watt for all the insights that you gave from a personal perspective, and the team at Zanda. Obviously, please do check out the Future CFO program and the links that we've provided. And of course, any interest directly on the fundraising side, please do reach out to me or to us directly. Well, this is all recorded, so feel free to have a rewatch and reach out. But until the next time, thanks everybody again, and we'll see you next time.
Yeah, thanks a lot, Ross. If there's any questions that urgently need to be answered, then flick them through to me and I can sort them out.
Perfect.
Thanks again, Andy. Thanks, Ross.
Cheers, guys. Bye.
Take care.